Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, most people consider life insurance to be just a tax-saving device. As a result, they either forget to pay their premiums or face a problem in maintaining the policy. Not surprisingly, a number of policies are discontinued or simply lapse. So what should you do in case your policy lapses? What are the options available? To understand the entire concept better and also help you manage your life insurance policies and thereby your investments better, we have Yashish Dhaya with us, CEO and founder of Policy Bazaar. Welcome to the show. Yashish, now tell me, life insurance policies keep lapsing. I hear it all the time. Why is that the case? And also, we'll get into the details a little bit in a while, but general insurance lapsing is a far more, how would you say it, a far more...
it happens immediately.
It happens immediately, yeah.
Yeah. So, yes, about 60% of the policies in our country lapse within the first 3 years. So what that means is after 3 years, they're not continued. That kind of a lapsation can largely be explained by a couple of factors. First of all, there's a lack of involvement at the buyer's level in terms of what policy they are buying. So when mis-selling happens, through mis-selling, the agent is able to convince somebody to buy a policy. However, once the people find out more and more about the policy, they simply and they don't care what happened to the policy. Sometimes they're okay to take that loss, and hence they do not continue. That's one of the biggest reasons in my view. The second reason is people just forget that they have to pay for a policy. And this can happen for very simple reasons, like you change because companies are putting in an effort to try and contact you. Your mobile number might have changed, or your address might have changed. The people are getting posted all the time. You know, I get posted from Delhi to Bangalore, and I don't carry my mobile number with me, and I don't care about my life insurance policy somewhere, and that's it. That policy starts lapsing. So it's either a contactability issue, a forgetfulness issue, or it is, I have figured out this plan, do not want to carry on with it. A third reason could be genuine financial difficulty, where when somebody got into a life insurance policy, they believed they could invest for the next 20 years, but at some stage they figured that they cannot continue any longer because they have other financial compulsions, and this is not important to them. I think the third is a minority, because people's financials on average don't change so quickly. Right. And for somebody who had disposable income to invest towards life insurance policies of the sort that they invested in, that's usually not the case. So they'll be in that order of
So what priority. Kind of losses does an individual really incur? Because after all, you have invested, you have paid the first one or two premiums.
See, a lapse is almost the worst form of ending a policy. Continuing a policy, most of these policies are long-term policies. You only benefit if you keep them for the long term, and you do benefit a bit if you keep them for the long term, and especially with the ULIPs, etc., you benefit quite a bit if you keep it for the long term. However, most of these policies, if you were to stop them, the way to do so would be usually to put them into a paid-up policy. Otherwise, the losses one faces is obviously the benefits stop immediately. So, whether it's the death benefits, whether it's any loyalty bonuses, all of those stop immediately. However, the costs that you have incurred in the initial days are very much there. And as long as the policy continues, the costs continue to be there. So it is not very helpful. You have zero benefit whatsoever from the policy. So from a discontinued policy. What is better is to convert it into a paid-up policy, in which case at least you would get proportionate benefit.
So explain this concept of paid-up for our viewers.
Suppose you've decided you don't want to continue with the policy. You're done with the policy for whatever reason, whether it be financial, whether it be just, I didn't understand it so bad, I'm so upset, I just don't want to continue with it.
Right.
Which is what I hear all the time from customers. So I hear it a lot from customers. I just didn't understand the policy, and now that I'm getting a bit of it, I really didn't want this. I feel cheated, and I take a loss, but that's it. I'm not even interested. I don't want to look this way. In that situation, the mature thing to do is, once you get over the initial anger, convert it into a paid-up.
After all, it's one's money, isn't it?
Yeah, it's your own money, right? So what's happened has happened. You don't one mistake is not meant to be repeated. You convert it into a paid-up policy. What that does is, suppose you've paid for 4 years and it's a 20-year policy, it's become 20% of your original policy because you've paid for the first 4 years, you're not paying for the rest, and you would get essentially 20% of the benefits. That would include both the death benefit, the loyalty benefits, everything would be there. It's just like a normal policy, which was 1/5 the size because you paid for 1/5 of the time. Yes, you do lose a bit from a time perspective because you would have paid that same amount over 20 years. Now you paid it over 4 years.
So that's you write to the company, you tell them you want to do this.
Yes,
is it an easy process to do?
There is a specific process. You ask the company. You go to the branch. Most companies have branches. You go to the branch, or if you bought the policy online, you can call. You can again go to the branches, or you can call the company and say, I want a form to convert my policy into a paid-up policy. And when you convert your policy into a paid-up policy, from then onwards, it's become one. But most people don't end up doing that also. Most people just,
I think a lot of people don't even know that you can actually do this. That
a lot of people do not know they can do this. So paid-up, converting your policy into a paid-up policy is an option. And it's a better option than total discontinuance.
Right. So that's one option, that if you're really fed up, you don't want to continue paying, or for whatever reason, you can have a paid up policy. Second is you really want to revive it. You missed
you revive it.
So what is the process for that? And are there a lot of penalties associated?
Within the first 6 months, see, within the first 1 or 2 months, companies don't bother at all. You can just pay the premium, it'll revive. In fact, they'll be getting in touch with you quite a bit in the first 90 days or so. Even up to 6 months, not really a problem. After 6 months, you would usually have to pay the interest because you've delayed your payment by more than 6 months. You would pay the interest at whatever rate is mentioned, whether it's 10% or 15% or 12%. There will be a certain rate mentioned. You pay the interest at that rate, and then the policy gets revived. Most companies allow for policy revival up to 2 years in life insurance.
Up to 2 years. That's
up to
significant.
2 years. So I'm saying most companies, not all companies. Now, however, when you do go for revival of your policy, depending on the sum assured that you have, there may be certain checks that may come in. So up to a certain level, there'll be no checks. You just pay your premium, you pay the interest, and your policy stands as if paid and continuing. No problems whatsoever. However, let us say the policy you had was a 70 lakh rupees sum assured. Now there's a possibility that you have developed some disease, and hence you want to restart your policy because you suddenly become aware of something's changed, and hence, now you want that policy, right? So in that situation, the company, when they see that the amount is large, they would ask the individual to go through a medical again. And if they have to go through a medical again, then, if there is something pressing, which is, telling them this is no longer insurance, this is a certainty that I'm trying to cover, in that case, the insurance company will back out and will cancel the policy.
So that's a real possibility that you may not be able to.
That will only happen in large covers. Remember, for most of the policies, there was no medical checkup when you bought it the first time.
Right.
So why would there be one when you want to revive it? And hence, it's okay. But certain questions may be asked. If somebody's missed for 1.5 years, it's a large policy. Somebody may ask, why do you want to revive it now?
And there's an interest component also.
There is an interest component, but the interest component is not very significant. What is significant is any malintent because of which one now wants to revive it. So that is something that companies are quite concerned about.
So that is factored in. All right, you talked about the fact that 60% of all life insurance policies end up lapsing. And so who does that benefit? I think, wouldn't it benefit the companies in some ways? And
no longer. It's certainly...
Because it's a large chunk of money which the company doesn't really have to pay out.
In the past, it has benefited companies because the lapsation charges were very high. So see, as a consumer, if you lapse your policy within the first 3 years, one's going to get about 1/3 of all premium besides the first year premium, which means 1/3 of 2/3 of the premium, which means 2/9 of the premium, which is roughly about 22%. About 22%.
Yeah.
About 22% of what you have paid is what you're going to get back. That's not the reason one got into the policy, right? So breaking a policy or not converting it into a paid-up policy is really bad for the consumer. So the consumer definitely loses. The insurance companies earlier and even today do make a bit of money when a lapsation happens. However, that's not the way you can build a business. So there's full realization in the industry. So the industry no longer wants lapsation. The industry
they rather continue a customer over time.
They put in an effort. They put in an effort to try and do that. Increasingly, you've seen the ads run by Reliance and a few other companies. They're putting in an effort to make sure policies stay in force. There's a lot of pressure on the industry because where will the next customer come from? If you remember, we are selling about 2 crore policies in a year. Now, if you lose 2 crore customers, or let's say you lose 1.2 crore customers every year,
60% of that.
60% of them if you're losing, if you start losing customers at that rate, where will we get the future customers from? Like India may be a large country, but you can't keep going like that. So clearly there's a risk. And specifically if that reason for lapsation is because of mis-selling, then there is a very, very significant risk. So policies have been made a little more friendly from a lapsation perspective. So consumers do not lose as much as they used to lose earlier, and companies don't benefit as much as they used to benefit earlier. And also there are certain shareholder pressures towards reducing lapsation. So there's a lot of effort going on right now in terms of reducing lapsation, and whether that is, so companies really are keen.
So it doesn't really benefit, I mean, in a nutshell, it doesn't benefit the consumer,
anybody.
it doesn't
it hurts the whole
benefit the companies. So I think that one should take out of one's mind. But let me talk about general insurance. You were talking about the fact that it's worse
it's very extreme.
if you lapse your general insurance.
If I had a health insurance plan for the last 7 years, and I have accumulated a huge amount of no claims, bonuses and everything, and I miss my payment deadline by 1 day, I restart. My policy is over. Same on motor insurance. It's recently happened to me. I had 50% no claims, never made a claim since 1996, since I started driving. It was actually 65% earlier and then reduced. I had my own, bought from Bazaar policy, and somehow I did not renew it. Somewhere my mobile number changed or something, and all my benefits are gone. So I started 100% again, and so I've suffered personally also.
And that goes for health insurance.
Health insurance, motor insurance, any general insurance policy. That's an annual policy.
So even if it lapses by 1 day, all the benefits are gone.
By 1 day, it's gone. You need to restart it. You would need to go through an inspection again. It's like buying a new policy.
It's a cumbersome process. I've gone through a lapsed policy as well.
Yeah, and it's a cumbersome process. Plus, it's like buying a new policy. All your benefits, all your no claims benefits are gone. The company would do you a favor to give you a policy. So, it's not something that any customer should try to do, as in miss their policy payment deadline. That's not something that you should do, at least in general insurance policies.
Right, Yashish, now very quickly, what are the ways that one can prevent a policy from lapsing? I mean, a very basic question, but we all end up doing that.
It's in a way the same question as what are the steps to prevent a divorce. In the sense that marry right in the first place.
I have had a couple of policies lapse, but not.
My view is, first of all, when you're buying, get a bit more involved, so that you really buy into something that you want to keep rather than something you want to run away from. The second piece is, of course, as your policy evolves, try to keep those documents in one place, ideally electronically. Nowadays, many companies are allowing you to keep your policies in a mobile format or in your laptop there. So you are more aware, set up, have some kind of a wallet mechanism so that you know when the renewals are coming on. Very soon, even people like us will start providing these facilities where, all your renewal reminders, payments, everything can happen from the mobile very quickly. And I think that's very essential for the consumers. I think that's in a nutshell. And in case, just have a broad view of what all policies you have, and inform some of the family members. And it's just like paying your electricity bill or paying your telephone bill. So don't miss it. That's all.
Right, with that good advice. And we are taking your questions. We've got Mr. Mathur from New Delhi, and he says, I've got a few questions. There is some capping in the online policies regarding benefits of taking policies online and offline. Is there any truth in this? And also he talks about, he basically wants to know if there's
There's no difference. So the basic answer is there's no difference whatsoever between an online policy and offline policy. Online policy essentially is a policy where you can pay online. Besides that, everything else is the same. You'll still get the same policy. You still get the same treatments. There's certainly no capping. If you really want to think about it, think from a very simple perspective. The average ticket size, the average sum assured of a life insurance online policy is 72 lakhs. The average sum assured of a life insurance policy sold offline is less than 5 lakhs. 72 lakhs versus 5 lakhs. So where is the capping? There is no particular capping in an online policy versus an offline policy. No.
Right. We've got Joseph from Goa. He says, can you please explain the use of taking a zero depreciation cover for my car insurance policy?
Yeah, I think this is a very important cover. There are, and I'll speak about a few more, but what a zero depreciation cover does, say your car is 3 years old and it's depreciated by 60%, by 40%, and you have a claim, and in the claim the expense is 50,000 rupees, but because you have depreciated, your car is depreciated by 40%, you would only be paid 60%, which means about 30,000 rupees. Now the point is you have to buy new parts, and as you pay for the new parts, somebody's got to pay for the remaining 40%, and that somebody ends up being you, because you can't really get depreciated parts, right? So you'll have to pay for new parts, and while that ends up being you, you don't like that, because 20,000 rupees you thought you had a insurance policy, so why are you paying this 20,000 rupees just because somebody thinks it's depreciated? So a zero depreciation policy essentially means all your parts would be counted as if they have not depreciated at all. So the reality is you will have an expense of 40,000 or 50,000 rupees, and you will get the 50,000 rupees. Now the rationale for that thinking is that as your parts have got depreciated, this is the salvage value, etc. So this is an important part. Even in a zero depreciation policy, the salvage value will be deducted. Now so salvage value is when these parts are taken out, suppose the total cost of new parts is 50,000 rupees, and the old parts can be sold in the market for 3,000 rupees. So the salvage value is 3,000 rupees. So you would get only 47,000 rupees, and it's your job, and this is the unfair part of it, it's your job to get rid of those parts and earn 3,000 rupees out of it. It's a bit of an unfair part of insurance, because ideally it should be the workshop that should be doing it, which is tied up with the insurance company, or the insurance company should be organizing it. It's not my job to go about looking for a customer for my salvage parts. That's usually quite an odd thing, but that's the way it is.
Get your local kabadi.
Now, but there are a few other covers that are very interesting. So there's a cover called return to invoice. Now return to invoice means, suppose your car is 4 years old, it meets with an accident, and it's a total loss. All right? If it's a total loss, you don't get just the depreciated amount, but you get a new car, the same car if it's available, or a similar model, with all road taxes, etc., everything paid. That's an additional cover. You also have something called a no claims benefit protector. So for someone like me who had 20 years of no claims or whatever, in case an accident happens and you have a large no claims bonus, at least in a few small claims, your no claim bonus would not be lost. So you can make your claim without the fear of losing that no claims bonus. So these are some of the important pieces that one can. And there is roadside assistance, especially for women. It's very important because and for anybody actually, we travel odd hours. Sometimes things like a puncture also can make us feel a bit uneasy. So if you have a 24/7 roadside assistance, one can sit inside the car, make the phone call, somebody will come to assist you and sort out things. So they're helpful covers.
Right, we've got Neha Sani from Mumbai, and she says, hi there, I wanted to get my dad's knee surgery done. However, he's not insured at this point. His age is 65. Is he eligible for an insurance cover? And is this because this is pre-existing, would somebody actually cover that at this stage?
So see, he's certainly eligible for an insurance cover as long as he's fit otherwise. So he can go through a medical and get an insurance cover. However, if there is a surgery on something which is known, you do not take an insurance cover for anything that is known. See, as a principle, it will hurt you to try and take a cover for anything that is already a known disease. Either it will get caught and you would not get the claim, and eventually you would have spent the money thinking you want to get the claim for this. So, you would just spend so much money on the cover that it's actually better going and getting it done yourselves. So for any known disease, when you already know that surgery has to be performed, then there's only one way. You got to financially plan for it. If a health cover had to be taken, it had to be taken earlier, not later.
Right. We've got Jatin from Uttaranchal. He says, I heard that all the life insurance are going to have uniform features from 2014, irrespective of the policy you buy. The benefits are going to be the same. Can you confirm that?
No. There is some kind of standardization coming into features, and there's some kind of standardization coming into charges and returns. However, there is no move to make them so standard that the policies become very similar. In fact, companies are bringing out more and more innovation in their policies, and companies are really trying to do that rather than standardize, because there are lots of needs that are not fulfilled yet. investment is just one of the needs, and investment is not the primary reason why you invest in life insurance in the first place anyway.
Right, Yashish, that's all the time that we have on this episode of Policy Bazaar. But you can write to us, write at ask.policybazaar.com or tweet us at policybazaar_in. And we'll see you next time. Goodbye.